Hi and welcome. I'm Vipul Mittal, and in this session, I will discuss possible causes of a material misstatement. I've discussed what is a material misstatement in another video. Do watch that video to get an understanding of material misstatement. Now, what are the possible causes? A material misstatement of the financial statements may be due to the following reasons. So, three possible reasons we are discussing here. First is appropriateness of the selected accounting policies. Accounting policies selected by management are not appropriate and a possible cause of material misstatement. Accounting policies used by management are not appropriate. Management's accounting policies are not appropriate, not in accordance with GAAP, for example. It does not ensure fair presentation of transactions and events. Management's accounting policies are not appropriate. For example, management has a policy of recording property, plant, and equipment at fair value when it should be recorded at cost. So US GAAP tells you to record a property, plant, and equipment at cost, but management is recording at fair value because this is management's policy. Management records property, plant, and equipment at fair value. Accounting policy is not appropriate. Give you another example. Inventory. Management has a policy of reporting inventory at lower of cost or market. Management account for this inventory using FIFO. But because management is using FIFO to account for this inventory and also using lower of cost or market, this is not in accordance with GAAP. Inventory that is accounted for using FIFO method should be reported at lower of cost or NRV, not lower of cost or market. Net realizable value. But management has a policy of recording all inventory at lower of cost or market, which is not appropriate, which is not consistent with GAAP. Another reason could be application of accounting policies, how the accounting policies are applied by management. So one reason could be accounting policies are not appropriate. Another thing is that accounting policies are appropriate, but those accounting policies are not properly applied. Application issue. For example, let's say X company has made investment in debt securities, and this investment is classified as investment in trading securities. So X company has made investment in trading securities, and these are to be reported at fair value. So trading securities are reported at fair value. But the method used by management in calculating fair value is not appropriate. How this fair value is calculated? This calculation of fair value should also be as per GAAP, as per accounting standards. The method that X company is using to calculate the fair value is not as per GAAP, is not appropriate. So there is an application issue because the method used to calculate the fair value is not as per GAAP. I give you another example. Company has a policy of recording an appropriate amount of allowance for credit losses, kind of allowance for uncollectibles or allowance for bad debts, but the terminology that you use is allowance for credit losses. And a company has a policy of recording an appropriate amount of this allowance, that there could be some bad debts, there could be some uncollectible, there could be some credit loss. We need to recognize an allowance for this loss. All right. So this policy of recording an allowance for credit loss is in accordance with GAAP. All right. But how do you calculate this allowance? This is not as per GAAP. So you say that application of management accounting policies is not appropriate. So management has a policy of recording allowance for credit losses. Good. But how this policy is applied is not appropriate. Calculation of allowance is not appropriate. No, the appropriateness of the financial statement presentation. Again, the question is that whether the financial statement presentation is appropriate or not. If financial statement presentation is not appropriate, it may be a material misstatement because presentation is not appropriate. I give you an example on this. Results of discontinued operations. Results of discontinued operation should not be presented as a component of income. It should be presented separately. But management does not present results of discontinued operation separately. Management does not do that. Presentation issue. Management is not presenting properly the results of discontinued operation because it is to be presented as a separate component of income. It should be presented separately. Another requirement under US GAAP is that per share amount for income for continuing operations and for net income. So here I'm talking about EPS data. So per share amount for net income is to be presented. Per share amount for income from continuing operation is to be presented on the face of the income statement. But management does not present this EPS data on the face of the financial statement. Presentation issue. Financial statement presentation is not appropriate, a possible cause of a material misstatement. Terminology used is not appropriate. You're not using the proper terminology. Presentation issue, possible cause of a material misstatement. Appropriateness or adequacy of disclosures in the financial statements. So here we are talking about appropriateness or adequacy of disclosures. So disclosures are not appropriate or disclosures are not adequate. A possible cause of material misstatement. Management provides an incorrect description of assets impaired, incorrect description of facts and circumstances resulting in impairment, inappropriate disclosures, incorrect description, or the disclosures are not adequate. Some disclosures are missing. For example, disclosures are required regarding fair value or amortized cost or original cost, but such disclosures are not made. Disclosures are missing. Disclosures are not adequate. So a material misstatement may happen due to any of these reasons, that management has not properly selected accounting policy. Management's accounting policy is not appropriate. Accounting policy selected by management is not properly applied. Financial statement presentation is not appropriate, or disclosures are not appropriate or not adequate. All right, students, I hope this session was helpful. We'll connect again, watch more videos on material misstatement and auditor's opinion to get a good understanding.